just by way of introduction, before I introduce our panel, and there will be time for you to ask questions at the end, I wanted to say that when I first started coming to Groundswell and other events, the words that related to natural capital markets was that it was a wild west. I'm really hoping that that is becoming a bit old-fashioned, and that there is now much more of an understanding that what we all benefit from is the very key injection of integrity into the natural capital markets opportunities. And that has come through some things that our government has done, such as getting the BSI program on nature investment standards. We've got the overarching standard out for conservation. The carbon and biodiversity standard is in development. And this will bring the kind of credibility that farmers and investors need. We've got BNG, but Biodiversity Net Gain now, with its biodiversity metric and conservation governance requirements in place. And we've got the Woodland Carbon Code and the Peatland Code, which are considered by many as the gold standard mechanisms for that kind of market. And we're seeing support for greater access to these markets with organizations like the Green Finance Institute doing really important work. And if you go onto their website and follow their application, the Nature Markets Framework, you can see a route as a farmer of how you can access these markets. And you can start seeing a way where farmers can go straight to the buyers and the investors, and cutting out some of the middlemen that have been so active in this space, but do have a very important role to play in the future. And finally, we've got TNFD, the Task Force on Nature-Related Financial Disclosures, which I think, as that sort of rolls out, is going to have a very important impact here. So I'm going to just introduce our panel and say that what we really want from this session is for all farmers and land managers and their representatives who are here to be a bit clearer on the opportunities as we look into the future of capital markets. And I'm going to introduce our panel. First of all, Chris Sparrow, who is on my far left here, is the Managing Director for Natural Capital Advisory, a subsidiary of the GWCT, the Game and Wildlife Conservation Trust. He's a chartered surveyor, business owner with 27 years experience covering predominantly rural interests. He's been head of rural and coastal for the Duchy of Lancaster, and that followed 11 years as a resident agent at Boughton in Northamptonshire. Stephen Lang, on my right, is Managing Director of Pollination, which is focused on food systems transformation and the development of financing mechanisms to scale regenerative landscapes, the very reason why we're all here. He has advised global corporates, financial institutions, development and climate finance providers, philanthropic foundations, and governments on accelerating transitions to regenerative systems, and has been the heart of mobilizing several multi-stakeholder coalitions focused on scaling regenerative agriculture. On my right is someone familiar to so many of you, Teresa Dent, who's been Chief Executive of the Game and Wildlife Conservation Trust since 2001. And in this role, she's been able to combine her practical and business experience of farming and land management with conservation prescriptions and policy produced by GWCT scientists over 20 years. And she's helped the GWCT create the concept of farmer clusters, something that we're going to be talking about a lot in the context of environmental farmers groups, which is key, I think, to this delivery. And on my left is Rob Shepherd. He's the managing partner of Allenford Farms, an 800-hectare mixed farming partnership, and is the lead farmer of the UK's first farmer cluster group, the Martin Downs Farmer Cluster, a remarkable success. He served in the armed forces and special forces and is involved in a number of agriculture-related businesses, including NFU Mutual Regional Advisory Board, and past vice chairman of Wiltshire Grain. And he has chaired the environmental farmers groups since its inception in 2022. And before we go into the first question, I just wanted to say something about EFG. I visited the one down in the Wiley Valley. It is one of the most remarkable things. They cover about 3% by actual land in terms of farm members that are part of these groups. But the impact they have is not far off a fifth of England's farmed area in terms of what they're doing in catchments and across landscapes. It's a farmer-led, farmer-owned cooperative group delivering positive environmental change funded through the Natural Capital Trading program. It is acting as a trusted navigator for farmers and landowners by providing a cohesive approach to baselining, planning and monitoring natural capital at a landscape scale, and ensuring fair financial rewards for members. And so I'm going to start this session by going to Chris. So what, Chris, would you say are the financial opportunities now for farmers in natural capital markets, and how do you think they are going to develop over the next few years?
Thank you, Richard. So we've been working primarily in the statutory market so far, working with developers on nutrient neutrality, most recently BNG. But what we're seeing right now is investors start to enter into the fray. And I think that's really interesting because of the confidence that's starting to build as a segue really to getting to the voluntary sectors. And I think people have heard me say this before. I think the statutory work we're doing at the moment is our sort of hard apprenticeship toward getting to the voluntary market, because I think the scale there is really where it gets quite interesting, and where farmers who would do this as a sort of one enterprise alongside everything else that they do can be something that's real and can generate a sensible alternative income. In terms of the statutory market, Richard, it's been tough because everyone's had to start from scratch. We have been essentially reactive to the requirements of developers for nutrient neutrality, and we've had to create contracts from scratch. We had to understand what it is we were selling, and but there has been some themes that have arisen over the course of the last 2 years of our trading. And one is that it's much easier to sell something that is real. And what I mean by that is, if you are selling phosphate credits, operating in a wetland where you know what the phosphate load is on the way in and then what it is on the way out, and you can make the deduction, is a very clear calcula. And the buyers feel much more comfortable with that. And so that's where we've sort of pressed our attention. And I think it gives confidence to the pricing and the product that the people are buying. The BNG we like, that is just started. We're only in a number of hundreds of thousands of trade on BNG, small packages. The metric is very good for that because it is a clear line of sight of exactly what it is that we are selling. And the developers are becoming more comfortable with that product. I was playing golf last week with 2 national house builders, and it was interesting their attitude towards it in terms of, initially it's just been an irritation, but now they're starting to feel, actually, if I am going to buy product off-site, what am I buying and what does it look like next door to the neighbouring projects and so on? So there is a more, I guess, responsible attitude toward these statutory markets, because remember, they are only a small cog in a much bigger, more expensive wheel of development, and but nevertheless it's being taken more seriously, not least because it's now statutory on the BNG side. So but my goal really, Richard, has been to build a foundation from which we can move to the voluntary market, because if we can create a framework of valuation that is fair and reasonable for the products that go into the TNFD as corporates look at the impact and dependence on the natural environment, then I think that's when this market will really fly. But we've still got some hard yards to go. And, we're seeing, the detail evolve on a month-by-month basis.
Thank you. Thanks very much, Chris. I'm going to turn to Stephen. Can you set out for us the sort of context of natural capital markets in relation to the farming transition? I know you've got experience not just domestically here, but elsewhere in the world. But to see what the main barriers that currently prevent ready access for farmers to reach these markets.
Yeah, thanks, Richard. Good morning, everyone. So I think there's a question here around what's the criticality of these markets to transition. And the short answer, I think, is that natural capital markets are critical, but they're not a silver bullet. They're nascent. And we can't wait for them to mature before we transition. So the wider context here, I think, is this shift is all about not just practices, but moving to a different set of outcomes: healthy food, climate mitigation, and adaptation and biodiversity recovery. And put simply, unless we reward farmers for that new set of outcomes and rewire the financing system to do that, then farm economics don't work. So I think there's a question around what, therefore, are the transition incentives that we need in the next 3 to 5 years, either through premium pricing, crop insurance, guarantees, preferential rates, to move through that transition period. In terms of the barriers, complexity is a huge barrier. Lack of clarity in light of the proliferation of different schemes, which I think is creating confusion, and ultimately that leads to a lack of confidence in which of these schemes and systems to back. Within that, there are difficulties around measurement, which metrics, how to track them, what technology to use, what's the cost of that measurement. I think there's a long way to go in terms of standardization, in terms of regulation, and also figuring out, well, who pays, particularly when it comes to biodiversity benefits. Who pays, and how do those payment mechanisms work when the benefits are really shared across a large group? So I think inherent complexity means we're going to have 3 to 5 years of experimentation, but we've really got to figure out how do we reward and incentivize early movers and first movers so they don't feel that they may get penalized.
Do you think that farmers, and I speak as one, are a pretty small C conservative bunch? It's only when we go to the pub or cattle sale or something, we hear that other farmers have done something that most of us really want to get stuck in. Is that an issue, or is there is it something more intrinsic in the value of the marketplace?
I'm not a farmer, so I won't speak on behalf of farmers. There are others on the panel who can maybe answer that question. But I would say farmers are smart business people. So I think when you look at this from the perspective of what's a smart business decision and how do the economics work, then to the extent that there is caution, I think that will be born of thinking quite carefully about the economics of transition. One thing I would say is in the next 3 to 5 years, it's very clear that the demand for regenerative offtake is going to outstrip supply. And often that's kind of overlooked in the medium-term economic equation. But if you look at all of the targets that are being set for regenerative sourcing, we're going to hit a point in the next 3 to 5 years where demand is basically outstripping supply, which will shift pricing economics, I think.
I think that's really useful. Thank you. Teresa, can I move to you? And can you give us an impression of what the impact you think this will have for farm conservation, and how the GWCT as an organisation is supporting this?
Well, thank you, Richard, and it's great to see such a full tent. The GWCT is a conservation charity like many others, but we don't have nature reserves. So we use the research we do to help farmers and land managers to make their own land a better place for nature. So this whole concept of environmental farmers groups, farmers working together collaboratively to improve the environment and enhance nature, is absolutely at the core of what we're trying to do as a charity. Every government is being told that it faces a biodiversity crisis. The message I would like government to understand is that whilst we have wonderful conservation NGOs, that the whole sum of the nature reserves in the country only add up to 8% of the land area. So if government is going to hit its environmental targets, it's got to work with you as farmers, land managers, gamekeepers who look after the 72% that is capable of rising to that challenge. So I see the environmental farmers group as two sides of the same coin. The top of the coin is delivering fantastic environmental outcomes, and the groups set themselves 3 targets, so to reverse biodiversity loss and achieve species recovery, to get cleaner water in our rivers, and to get their farms to net carbon zero, and in the uplands to also restore peatland. So those are fantastic environmental outcomes. The other side of the coin is to use the entity and structure of the environmental farmers group and the power of farmers working together to get fair rewards for those farmers for the environmental goods and services they're delivering. So I think the scope is enormous because the environmental farmer groups operate at catchment scale. That means the farmers are operating at ecosystem scale. And I don't think there's anything else available in the countryside at the moment that has the capacity to deliver against government's environmental targets at that sort of scale. DEFRA have got very interested in what the farmers are doing, and they are now looking to support the EFG groups develop and see how they can build scope for EFG groups to expand and develop through grant funding. In terms of how does GWCT support it, well, the exciting thing from my point of view is the opportunity to design a catchment scale conservation plan. We're doing the first one at the moment, which is in the first catchment that the farmers set up the EFG for, which is the Hampshire Avon catchment. It's very kindly been supported by the Esme Fairbairn Foundation. And we will be looking at how we can design a plan that will deliver those 3 objectives, biodiversity, cleaner water, and net carbon zero farming across the whole catchment, but working at an individual farmer level on individual farms and aggregating all that together so we can say to government, yes, we can meet your targets. And GWCT can offer that scientific advice, the ecological expertise, the fact that we've worked with farmers for decades, and also that monitoring and verification that I think farmers are going to need to prove to the outside world that you are delivering fantastic environmental outcomes and that you are the solution to the biodiversity crisis.
So that's a call to weaponize the farming community to deliver on the government's target to ensure there's no net loss of species by 2030 and to fulfill its commitments. So, Rob, I gave a very brief outline of what EFG is all about, but perhaps you might like to give a bit more detail about it and say what impact this is having for farmers and how does EFG help navigate this world for its members?
Thank you, Richard, and good morning. I suppose as a farmer, we had reached a crossroads a few years back after Brexit when we saw that our subsidy was going to be lowered. I mean, it wasn't really a crossroads, it was more like a spaghetti junction. And we were all looking around desperately for other income streams. We were naturally, I think, farmers in England are naturally very environmentally concerned. You can tell by the turnout here just how seriously they take the environment. And we realised that particularly in my neck of the woods, we were surrounded by like-minded farmers that were doing a lot for the environment already and actually not really properly being rewarded for it. And we also were keen that we adopted a sort of bottom-up approach where the farmers decided their own environmental destiny, because that's what we've been doing in the farmer clusters, thanks to Teresa's lead, since 2013. So it seemed like a natural step to take the cluster groups into a more commercially minded body, and that's why we formed the EFG. Now, we identified at the time that farmers had two fears, really. I suppose the main fear was that we were going to miss a bus, because we were all getting letters through our letterboxes telling us that there was millions of pounds if we did this, that and the other. If we sold it to some company, we could sell all our natural capital. So we were worried we were going to miss a bus. But the other thing we were worried about was that we were going to commit to things that we would regret later. If you commit to some of these practices, you might be committed for 80 years. You might not do a very good deal, and then your grandchildren will be desecrating your grave. So we had those two primary concerns. So it seemed sensible to us to get together as a group, because cooperation does work for farmers. And if we can get into a cooperative mindset, we can spread that risk. So the EFG was formed on that basis. And luckily, we've got some fantastic professional advice to guide us. And we consider ourselves as a group to be the trusted navigators for these farmers that are trying to navigate their way through these shark-infested waters. So you're on the inside track. You know whether the intelligence you're getting, is honest. And the other thing that you can do with an environmental group type model is you can spread the risk. So if there's a 100-acre deal on biodiversity net gain, you could simply take 1 acre yourself and have the 99 other acres divided amongst other members of the group. So that way your grave would only be mildly desecrated. Okay, so that was what we felt was really our USP. And it's really gone from strength to strength. I obviously think it's the right way forward, but as Teresa said, it's absolutely essential that as a group, if we want to maintain the confidence of the people that are going to be funding this natural capital, whether they be private funders or government, we have to keep the twin tracks of the environment and the natural capital market together. So you don't get one without the other. This isn't a get-rich-quick scheme. It's basically a way of being rewarded properly for looking after the land, as I can tell everyone here on this fantastically turned out show wants to do anyway. So it's a no-brainer, really, Richard.
Thanks, Rob. I think that Teresa needs to be recognised for developing this concept of clusters, and how farmers, how we didn't tend to work very closely with our neighbours. And suddenly, through the development of the Marlborough Downs, making space for nature, and what you're doing in the Hampshire Avon Valley, new concepts have come into my ken, such as lapwing envy. The whole concept that you're changing the norms in an area, and the opportunities really exist here to make sure that we're building on this. And the development of the cluster program was happening sort of before we started getting really excited by the possibilities of green finance and how it would flow. Chris, can I just come back to you? On biodiversity net gain, is there a risk that we all get a little bit too excited about this statutory market? Because a lot of BNG will be provided on site by developers, and what they can't provide on site, they will then take to the marketplace, to people like you. And what what is the actual? I mean, is it 4,000 or 5,000 hectares a year across England, or is it bigger?
So what we're seeing in the BNG sector is the larger developments are being more sophisticated about how they roll out their development and look at their appraisals with a view to delivering as much as they can on site. That said, we've seen things go full circle where they do that and then realise actually they can build more houses, so come back to us looking for more BNG off-site. So it's a market appraisal for them, and that gives me the opportunity to talk about valuation. So the key point we've been trying to get across is these goods, and particularly BNG, is nothing to do with the cost of creating the environment which is being used to offset. It's the opportunity afforded to the developer and what share of that profit arising on that development should flow back to the farmer for delivering those goods. Because those goods, the BNG, is a development good. So that's the basis of our appraisals that we do with the developers, and it helps arrive at a fair price. In terms of the overall uptake, I think it is slower than we thought, but I'm not worried, because I think, as I said before, it is the segue to what I'm more interested in, which is providing shorter term biodiversity gain to corporates in the future, as a part of them offsetting their impact and dependence. So it's a necessary process to get all the contracts right, to get the valuation principles right, and then apply them on a much larger scale in the future.
Thank you. I'm just going to go to Stephen very quickly, and then I'm going to come to you. So start getting prepared to put your hand up, and there's a roving microphone. But Stephen, can I just get a little bit more from you about where you feel these markets are likely to evolve, and what you're looking for the regulatory space to be? We can risk over-regulating. Government can risk over-regulating this space and easing out the virtuous. It can under-regulate, and we can have all the accusations of greenwash that come with low-integrity marketplace. But do you feel that is being got right, and what sort of direction travel would you like to see?
I think the direction of travel is very clear. In terms of the finance that is mobilizing and the different actors in the finance sector that are saying they want to play a more major role in financing the transition. So the direction of travel there is clear. I think the direction of travel on measurement is very clear. It's evolving, it's converging. The costs will come down as technology develops. So I think that is also clear. But I wouldn't wait for regulation and markets. The thing that I'm most excited about in this whole debate are clusters. And not just in the UK, but the world over. The real key to this is farmers joining forces at catchment and landscape area to shape the mechanisms and the regulation that then enables them to drive the outcomes that they're already driving. And there are lots of financing providers that are looking for contexts where farmers are organized into those clusters to effect outcomes at landscape scale. So I would say don't underestimate the power of that movement to shape and inform both regulation and financing mechanisms.
Thank you. So, has anybody got a question for any member of the panel? We'll come to you first at the front. Nikki, thank you. If you could say your name and what you do, just briefly.
My name's David Bates. I'm the chairman of Regenerate Asset Management. Firstly, I'd like to say I'm very supportive of what you're doing. My question is, though, the United Nations started off with CERs, which were the base of all carbon markets. The UN is now launching a whole biodiversity metric using the science from UK universities and from the Natural History Museum. Would it now be better to start to come in under the global standard of the UN, which covers all biodiversity, rather than the very narrow view that we have under biodiversity net gain?
If I can venture a thought, I think there are a number of people who've been trying to create one single metric. I have my concerns about that, and the concept of trying to herd cats, of trying to make sure that we did select one global standard, that would adequately apply for us. But maybe others on the panel would like to comment. Chris, you want?
I think the integrity of the credit is, or unit in that case, is critical to pricing and will be increasingly important going forward. It seems to me that the UK integrity, from when I'm talking to investors, is seen as very strong, and I think that's really important, because whatever the price is now, what we're really hunting for is where is the price going to be in 3, 4, 5, 10 years' time. So I have focused our attention on the UK market. I know there's an international market, but when I talk to investors, and it comes back to the scale thing, the main problem is having a ticket size that's big enough. So if somebody wants to buy soil carbon, when we talk to investors, the entry ticket is 300,000 tonnes to make it commercially viable. So we have to create scale, and it has to be consistent for the product. So that, and therefore all I'm interested in is creating the highest possible integrity credit. And I think that feels like it's UK based at the moment, using the UK metrics.
I expect if Patrick Holden's here, he'll start berating us about the global farm metric, which is his big beef. Anyone else on the panel, or should we come to another question? There was a lady there, yes.
Thank you very much. My name's Liz Bowles. I'm the Chief Exec of the Farm Carbon Toolkit. I'm a real enthusiast of the Environmental Farmers Group, because I think collaboration is definitely the way to go and to build scale. Interested in the kind of marketplaces you've been talking about this morning, and I'm just wondering what your ambition is as an entity to go beyond actually just offsetting the damage that's being done by developers in terms of BNG and nutrient neutrality, to go towards restoring nature, because I think we're one of the most nature depleted countries in Europe, if not the globe. So that's my question. Thank you.
So I could Rob and Teresa on that one initially, unless anyone else wants
Well,
to.
thanks, Liz. I mean, I think that we naturally will always go above and beyond what we are trying to achieve to get the financial reward, because that's just in our DNA. And I think that's just it. We won't be taken seriously unless we're seen as the champions of the environment before we're seen as the selling of the natural capital. So I have no doubt. I quite agree with you that there's a lot of work to be done, but I think we will move in that direction, and we will do that extra bit. But we're farmers, and we're commercial business people, and we need to be rewarded to do it, and we won't be doing it, I'm afraid. They say, the old adage is, if you want to go green, you can't be in the red. So we've got to get a fair reward for doing these things.
It's a great question, Liz. I think it's a twin track. I've never met a farmer yet who, once they embark on a nature improvement journey, don't want to know that they're succeeding. That's the single biggest question you get asked. What are you going to measure so I know whether I'm succeeding with what it is we're setting out to do? So I think farmers are naturally ambitious, but it's a twin track between achieving that recovery that they want to achieve on their farms, and if we aggregate it at whole catchment scale, we're achieving something measurable and verifiable that can come out at countrywide scale, but also being fairly rewarded through the market mechanisms that government and others are setting up for delivering those public goods and services. But I do think the ambition is there.
Thank you. We've got a question there, and then we'll come to you.
Morning. Nicola Morris, organic regenerative farmer from Worcestershire. A lot of these schemes are coming in to replace the basic payment screen, and the Sustainable Farming Initiative is one of those. The BNG, could you kind of explain it in that kind of context? So what would a farmer be required to do? What sort of income would they expect, and how long term? So if I offered 10 acres of BNG on our land, what does that actually look like from a farmer's perspective?
Chris, are you going to get that's a conference actually, but let's try and do it in try and do it in 2 minutes.
I think in simple terms, if I just use us as an example at EFG, what we're encouraging farmers to do is set up and register units proactively. And so they're identifying through the conservation plan areas of the farm that, are suitable for improvement anyway. So in very simple terms, you might take an area of arable and convert it to a pollen and nectar mix, which would give you 2 units per hectare uplift, which at 30,000 a unit is 60,000 a hectare. Now, that's fine, but it comes at a cost as well. So you've got to maintain those units for 30 years, but also crucially, you're seeing a devaluation in the land because of the obligations that sit with it. So it's quite a complex appraisal just to look at what is the performance of that. So this is why these markets can only ever, in my view, be a component enterprise alongside all the other things that farms do in order to identify the right land for doing the right activity in the long term. A lot of the work we've been doing has been reactive, where because of the nature of the momentum we've created, people have been coming to us, particularly the local authorities. But my job has been to make sure the members get as much value out of that trade as possible. We do have an equalisation within the operation because not everyone will trade on day one because the opportunities may not be there. And the receipts are quite lumpy. So some people are making millions and others are sitting there waiting, well, where's my share? And so the equalisation helps there. Also, the final point I would say on that is there are members within the EFG which may never trade, but they want to be part of the conservation plan and improve their the performance, the biodiversity performance of their farm alongside their neighbours that might be trading on the statutory market. But I think I'm going to try and persuade them to come in to the voluntary market in a few years' time when their overall contribution, does have a value at a scale basis. But I have technical people here that can run through it in detail, after the meeting if you'd like to grab me after.
I hate to add another level of bureaucracy into this, but I also think it's worth, as a farmer, to understand where your land sits within your local nature recovery strategy. Chris mentioned local authority. So if you, for example, are thinking of taking a creation of a wetland to the BNG marketplace, the strategy on the river that wetland feeds into is really important, and you're more likely to get it if it fits in with that strategy. I think that's really crucial. Yes, sir.
Thank you. Gregor Pierpont from Thoresby Farming. We're an arable and horticultural enterprise in North Nottinghamshire. In 2018, a set of advisory regulations came in on phosphates, and right now they have not had the force of law. Within the constraints of PERDA, and both to the Benyon and also to the other people who are slightly closer to the political world, what do you feel are the medium-term prospects of phosphates going the same way as nitrates and what was previously a voluntary code of conduct becoming compulsory with force of law?
I think regardless of whatever happens in the coming weeks, the draw on determination by people across the country to tackle water quality is really important. And then if they suddenly find that that's preventing much needed development, then you have this eternal tension, and every government faces that. But I don't know whether anyone here has a comment on the phosphate issue.
Well, difficult to speculate whether it's going to become a legal requirement, but the Environmental Improvement Plan published by the current government in 2023 does say that there is a target for farmers to reduce their pollution into watercourses by 40% by, I think it's 2042. So I think there is, whether that becomes a legal requirement or just a requirement, I think farmers are going to need to be understanding what their current contribution is. And actually, I don't think anybody can tell you what your current contribution to pollution in a watercourse is at the moment and how it changes between now and 2042, because at least you want to be able to claim credit for what good you've done in improving it. So one of the things farmers are doing in the Environmental Farmers Group, and with some support very kindly from the Rothamsted, is to start measuring their own water quality. So what quality is the water coming onto the farm? What quality is it leaving the farm? And starting to relate that back to management things they're doing on a day-to-day basis to make improvements. So at least they've got some data with which to claim water quality improvements and to demonstrate that they are contributing to those national environmental targets.
Thank you.
Is there any chance we'll be able to offset, i.e. pay another farmer in the same water catchment area who perhaps has a less valuable crop mix to, for example, create a wetland habitat to soak up some of the inevitable phosphate runoffs from high-value veg crops?
I mean, this is something that where the cluster grouping dynamic is so key, and you know, I've been seeing the most amazing landscapes in Hertfordshire with potato farming happening alongside it, and the impact, the benefit that one is achieving can sometimes be countered by a very intensive activity next door to it, particularly with sudden weather events. So, I mean, I just think that the targets that are in the Environment Act now in the Environmental Improvement Plan are legally binding. So you're going to find governments of all persuasions absolutely determined not to break the law, and that is a very big driver of policy, which will feed through to this. Can I? There was a gentleman there, and then I'm going to go over there. Yes, sir, I'll come to you next over there.
That feels like promotion. Thank you. I'm Tristan Olivier, Chief Officer of the Institute of Specialist Surveyors and Engineers, but I also take part or participate in the Green Construction Board of the Construction Leadership Council, and I convene the Finance and Risk Work Stream of the CIC's Climate Change Committee. We all appreciate that biodiversity net gain pretty much ends at the boundary of any site being built, but we also know and understand that it is catchment level thinking, which is great to hear about, happens far, far further upstream. Can you tell us if there is any sort of mechanism that actually allows that catchment level interface to be able to take place so that construction or highways work can take place in that broader catchment context? And maybe feeding into that, are you aware of the extent, if at all, to which green finance could actually be introduced, say, as a percentage of overall project finance, could actually be made obligatory so that the constructors actually have an opportunity to engage with people who have the networks in place to leverage the huge spending power that they have at their disposal for positive impact?
So there's a bit of TNFD there we were talking about, and as that develops, the task force on nature related financial disclosures, as that develops, we can see a possible requirement to address precisely those things. But I'm going to go to you, Steve, and then I want to talk about it in terms of catchment and across a landscape. So I might come to some of you.
Yeah, I think the I was going to go straight to catchments, actually, because I think the significance of clusters and thinking about this at the catchment and landscape area is that the important thing to do is to map out all of the potential benefits that may flow from collective action in that catchment, put a value on those, and determine which finance providers would be interested in different interventions in the system that cluster and others could deliver. And there is interest in that, and there is green finance interest in that. Would it ever become obligatory? Maybe, maybe not. But I think there's an opportunity to present catchment transition plans in a way to a very broad portfolio of investors that are looking for precisely that kind of investment opportunity. But it needs to be done on a catchment by catchment basis.
Happy? Should we? There was over there, lady in the, yeah.
Thank you. Holly Story, Head of Nature-Based Solutions at National Parks Partnerships. I think it was Chris made an interesting comment towards the start that the voluntary markets, in particular for BNG, require the development of a product that's fair and reasonable. And I just wondered if the panel could expand on what they think is a fair product and a fair price that will help really accelerate nature markets.
So this is really getting down to it. So what does this mean for the farmer's income account? And what sort of range of products are we starting to see being brought forward?
Yes, I go back to my point about the opportunity afforded. So, if a corporate is seeking to offset the impact, what is the benefit to them? Because the TNFD is a selfish operation for corporates. It is there to show their shareholders that they will be here in 25 years' time. They are robust enough to transition through the evolving environmental operating environment that they're in. So we have to work closely with them to build a framework that is reasonable, that rewards the farmers, but does reflect the benefit to their company. And that's the hard bit. And I know that, the pollination, we've done partnerships with them. How do you get that right? Because it has to be an open book between buyer and seller in order to arrive at what we would call an open market transaction, as in one where, everyone's acting reasonably and isn't forced into position. I think one point I'd like to pick up was in terms of the catchment scale, if this is to be successful, then, the foundation has to be of a positive improvement in the catchment. The trades essentially just flow in above that. It can't be the other way around because it'll be the cart before the horse. And that's why we've been putting quite a lot of work into those catchment scale plans. But it's those plans that I think that the corporates will find interesting because they're buying a product within a bigger picture. And when they report on it, as they're required to do, they've got more to go at. And I think there's a value in that.
So, Rob, in your cluster, and Teresa, in your experience of them across the country, what give us some examples of trades that you're starting to see being brought forward?
Well, it's very early days now with this market, and so we're really just preparing ourselves by looking at our land now. So as farmers, we're just looking at our land instead of with our farmer's eye on it and just looking at the way that we might yield 4 tonne an acre with the wheat. We're now looking at the separate parts of our farms to see which sections of them would most lend themselves to a BNG trade. And then with the EFG, we're then trying to get the farmer members of that cooperative to start amassing intelligence about their particular land. Now, it can cost money to do this because you're baselining things and you need professional help. But to me, farmers don't think twice about spending £500,000 on a combine to go into a crop that they're probably not going to make a profit out of combining anyway, and yet they won't spend £5,000 on getting a professional to come in and audit their land. So at the moment, the stage we're at with the EFG is everyone needs to actually get their own house in order, baseline themselves for their biodiversity, baseline themselves for the carbon, and so that they really understand what they've got to market, and then go to the EFG and say, this is what we've now got. Go out there and get me the best possible price for it. And of course, we've also now got the SFI and the ELMS, which has been ramped up and is much more exciting than it was when it first came out. And farmers are adopting that as well. So it's there's a lot going on out there, but it's in its early days.
Teresa, is there anything you want to? So let's take 2 more questions. Lady in the hat there. Oh, Sarah, hello. My neighbour. So I hope everyone heard that. Somebody who's been virtuous feels that the slash and burn farmer down the road has got much more additionality to offer to a marketplace. And this is a frequently said concern. It has been sought to be addressed. I'll come to Chris and then Teresa.
I'm happy to. So in the statutory market, you are where you are, and well done you. But there are still opportunities to create units through condition improvement, as well as putting more land into BNG anyway. I think where I think we asked for this to be included in the statutory market, but my view is where there is a high biodiversity density, then farmers should be rewarded for any additional units they create. So if you're in Lincolnshire, you're 1 unit per hectare, and you add another unit. If you're in, forgive me, Berkshire, and you're at 3 units per hectare, the next units you add, I think, should be factored to 1.5, because you've already done a lot of hard work, and therefore, because you're taking that environment to another level compared with your competitors in Lincolnshire, you should be rewarded more heavily. Now, that's not available in the statutory market, but we are going to build that into our voluntary market, because I just think it's a very easy play, and I think it'll be more attractive to or certainly as attractive, if not more attractive, to the voluntary market to be investing in landscapes that are actually already performing from a biodiversity point of view. I mean, if you are the chairman of ESSO, would you rather go to Lincolnshire or come to your estate to have a look round at what you've been doing, over the last 10 years, so creating a foundation, and what you can still do over the next 10 years? I think I'd rather come to you.
Teresa, you've been dealing with this this conundrum for some time.
It's a question we get all the time, and I think it's a very valid one from farmers who've been on the side of the conservation angels, and it's more difficult to see where the rewards are going to come from in the future because they're linked to additionality. However, there is scope to backdate, because the baseline for biodiversity net gain, the date, I believe, is the 31st of January 2020. So you say you've been on your journey for 10 years, so you can go back a few years on that. But I think Chris is right. We need to contextualise what you're doing as conservation-minded farmers and add value to that through the voluntary markets.
Can we just fit two? The lady in the front has been very patient, but so can we, you, madam, and then we'll have one here, and then we'll wrap up.
Susie Horn, Farmers Weekly. Probably a question mainly for Christopher Sparrow. The group approach has obviously got lots of benefits, and I think one of the concerns of landowners and farmers looking at these very long-term schemes is the financial integrity or security of the person who's going to be, or the body that's going to be paying them over that period. What does the group approach offer, if anything, in terms of ensuring that financial security in the way that a co-op might be able to afford bad debt insurance, a grain co-op or another marketing co-op? Does the group have that advantage?
Thanks, Susie. Yeah, this was something I was really worried about a couple of years ago when we started, because I had envisaged that the finance would be released on a year-by-year basis based on the performance of that activity, that project. But actually, everything we're doing now, it's a lump sum that comes on day one. And then the local authority have taken the position of the competent responsible body that is policing that activity. So the farmers are getting the money up front rather than having to wait and draw down on a year-by-year basis. So from that perspective, I am not currently concerned. As we move to the voluntary market, and it's going to be more likely that we will be paid each year on, say, a 5-year term, then I think we need to be careful on our covenant strength, and we're looking to do our trades with those with a strong covenant. Some of our sponsors are insurers, so they're looking at products that could look to protect us, and if we can have those paid for as part of a buyer's premium, particularly as the covenant strength of a buyer maybe goes down the Richter scale. But in essence, I'm not concerned, but scale is important. We want to be able to attract the best buyers, but in order to do that, we're going to have the volume of product that they're going to need.
Thank you. You've been very patient. Just the last question.
So I'm Jane Donaghy, and this is my partner Jonathan, and we run the River Rosing farm cluster. We started in October, and we've moved at a really fast pace. We've had our first BNG surveys done for watercourse units, actually. But we have a bit of an issue with private investors, and I can't remember who mentioned it earlier, but talking about a physical thing that they want to put their name to, that I've planted a tree, I've planted a hedge. Whereas for our river and our catchment, the important thing is nutrients and natural flood management. Is there any plan? Has anybody got a plan, or does somebody fancy having too many drinks tonight and agreeing to make a film to help us with investors to show actually it's not necessarily a physical product, but this is the process and this is what could be achieved. Look at what you could do and what you could fund. It's greater than putting in, 10 trees.
It's a very good question. Teresa, I'm going to bung that one straight at you.
Yeah, I'd love to answer that because you've put your finger on where I think the real strength of the environmental farmer groups and this ability to design a conservation plan at catchment scale lies, because it isn't just how many trees you've planted in that landscape if they're just dotted around the landscape, or how much wildlife friendly habitat you've put in, or necessarily how much less nitrates you've put in the water. It's the composite plan, and it's the ability of the farmers to work together across boundaries, create that connectivity. We had a meeting with a whole bunch of farmers on Monday to discuss what they wanted to achieve in the conservation plan. And one of the farmers likened it to a patchwork quilt. He said, we can design a patchwork quilt that is just random colours and bits of odd material and weird shapes all over the place, and we'll have a quilt. But I want this quilt to be an absolute thing of beauty that is a masterpiece of a landscape that really delivers biodiversity recovery. So I think that's what we've got to sell.
I'm getting signals that we've run out of time. I just want on your behalf to thank the panel and to just conclude by saying, I think Stephen used the word nascent. This is a nascent marketplace, but we have some clarity. In recent years, it's been like looking into a fog, and every now and again a wind has blown, and you've seen a little vista of an opportunity where you can take yourself towards these marketplaces. And I hope that this morning's session has done a bit of that and has shown you some opportunity, and that there are people here to help, and you'll see lots of people offering to help here to make this a reality. And the last question really gives an indication of where this could go. I mean, the shareholders or the employees of a company that is investing through green finance into your farm might one day, through blockchain or some other means, be able to know what that tree is doing, that watercourse, that wildflower meadow, and be able to see and feel part of it. And actually, I think that's a virtuous way where technology could take us. But let's get the fundamentals sorted now. And I think that we've been well served by the panel. So thanks, Chris, Rob, Teresa, and Stephen, and for you for all taking part.